Welcome back to The Price of Business. I am William Edmundson, service industry CEO and consultant, and we're here today talking to you about you and your business. I'm filling in for the vacationing Kevin Price, and just glad to be here. I'd like to introduce our next guest for the morning, and that is Chris Kidd of chriskiddenterprises. Chris, welcome to the show.
Thanks for having me in today.
Yeah, glad to have you here. And we understand you've got a guest. Would you like to introduce your guest today?
Yeah, I've got a good friend joining us today, Carlos Diaz Jr. He is a wealth management specialist. He does a lot of things. He's got several different companies. He writes for Forbes and for Market Watch. He's got a couple companies we'll let him tell us about. One where he's working with professional athletes on managing, wealth management there, and then also one that's geared more towards individuals, but we'll let him explain it. Good to have you back, Carlos.
Hey, Chris. Hey, William. Thank you for having me on today.
Morning.
So,
Morning.
Carlos, for those who may not be familiar, give us a little overview of your, the different companies that you run and kind of the difference between the Excel tax wealth management side and the MVP wealth management.
Absolutely. I appreciate it. Excel Tax and Wealth Group is a company that I started. It's for individuals, so retirees, pre-retirees, business executives, and professionals and business owners. MVP Wealth Management Group was a little bit different than Excel Tax and Wealth Group in that I started exclusively for professional athletes and entertainers. However, the majority of our clientele has been professional athletes. I just wanted to give it a little bit of a difference, and because there are some differences in those two markets, usually the biggest difference being that professional athletes are going to accumulate wealth in a relatively short period of time. So almost like our Powerball winners this past week, and usually everyone else, we usually have a working life on average of 30 years.
What do you find the average career to be for the professional athletes that you deal with?
The average career is, as far as for what after leaving their profession.
No, as far as their prime earning years as an athlete.
Usually their prime earning years are in their 20s, so usually from early 20s to about almost getting into 30s, and then you have some rare occasions. So you have your Kobe Bryants, your Kevin Garnett's that are very fortunate to be beyond their 30s and still have a large salary. In fact, almost going into their 40s.
Yeah, well, Peyton Manning's isn't he 40 now or over? How old is he?
I don't think he's
there.
40, but he's getting close. He's getting close into Brett Favre years.
Yeah, that's crazy. I can't imagine. I mean, I don't know what kind of injuries well, I do know Peyton Manning's, but just from stuff that I've been through, and I'm younger than him, and I cannot even imagine. Sometimes I still have dreams of playing football and stuff, but then I see somebody get hit, and I'm like, no, my body could not take that anymore.
No,
I'd be one and done.
Yeah, exactly.
Well, I agree. In fact, I think that there's a lot more injuries and a lot more long-term effects that go on within football than a lot of the other sports that are out there.
Well, Carlos, I know we've talked quite often, and we actually do some kind of somewhat similar things. I'm a financial coach and teach people about dealing with money and stuff, and work on the investment side as well. And I know Carlos and I mean, we agree on a lot of things, on especially on the athlete side and helping them. And he's got a great passion for helping these athletes and stuff. He's not just one of these guys who. Some of our conversations we've had is some of these guys that are out there just, trying to get some money, and also not just from the athletes, but people connected to them and stuff. So, like paying dues to be part of my network, like pay me a enormous fee just to come in and talk to my athletes. So, I mean, that's dangerous. Talk a little bit about that real quick.
It's becoming a little bit more common. It seems like in order to get into these high level athletes, you might get approached either by an agent or someone else in the business that wants either some kind of referral fee or some kind of networking fee, just to have access to potentially sell your investments and pitch to them. I'm sure it's been going on for a lot longer than I've been around, but it's just becoming a little bit more. We're becoming a little bit more aware of what's going on because of technology, and because we can see people from a more transparent light. So, for instance, we can actually go online and look at a financial advisor's background and see if they've had any problems, if they've had any kind of dealings in the past. But yeah, it does happen all the time, and unfortunately, you end up hearing a lot of these stories like Jeff Rubin that ended up scamming millions of dollars from multiple players. In fact, I speak to quite a few of them, and it's all based off of the trust. But if there's no trust there initially, and there's some kind of shady dealing in between, then not everyone's coming to the table with clean hands.
Yeah, and so many of those athletes, I'm sure, have come from backgrounds where they didn't have a lot of money, and they certainly didn't know how to manage it. So that's important to have.
Absolutely. I think the biggest misconception that's out there, especially in football, is that we see a lot of numbers as far as for contracts, but the general public doesn't know that the majority of that is not even guaranteed money.
Right.
Yeah, their contracts differ a lot from NBA contracts.
Exactly. Their contracting structure has changed quite a bit. So just because that we have a contract that's worth it's a multi-million-dollar deal, doesn't necessarily they'll pick up all of the incentives on the table. I believe I just read an article about Sean Lee from the Dallas Cowboys over in your area.
Yeah.
That he missed out on, I think, on $2 million worth of incentives because he didn't play 70% of the season.
Yeah, that last game cost him $2 million. Wow,
Ouch.
That's an expensive game.
No kidding.
Well,
it was a very expensive game. Yes.
Well, Carlos, I know as far as the referrals and stuff, I'm totally for that and everything in the right context. But like you said, it creates a dangerous situation too, where if they'll just let anybody have access to their players just because they can pay, they'll pay them thousands of dollars to get in, or hundreds of thousands of dollars, and that can create a dangerous situation, like you said. Certainly need people that you can trust, and you're one of those guys that I would certainly trust sending some of these guys too. So
I appreciate it.
Let's real quick give us a website and how people can get a hold of you, because we've got some more time, but I want to make sure that people get that information down.
Absolutely. My main website, which is about me, and it highlights all three of the two companies, is www.carlos, so Carlos, Diaz, Dias, and then Jr, jr.com. So carlosdiazjr.com.
And you don't have to be a professional athlete to get in contact with you, right? I mean, in fact, I was telling somebody about you the other day that wasn't.
The biggest thing is I don't prejudge people. There's people obviously that are a fit for me, and there's people that are not, but I don't prejudge anybody.
Now, do you generally work with high wealth individuals, or do you kind of work across the different income levels?
I do. It's a mixture of both. Again, because I'm not prejudging. I'm not necessarily putting the illusion out there. But just to give you an idea, I mean, obviously we all have our specialties. We can't be a specialist in everything, but I like to think myself more as from the strategy side, only because people obviously run into particular situations. So whether it's a retiree or somebody that's entering that phase where they have to start taking money from their retirement accounts, and now they're looking at the collective balances, and they're saying, whoa, if I take a required minimum distribution, I'll be in the top tax bracket and end up paying that Medicare surtax. Or it's just someone that thinks that they might be paying too much in tax and there might be a better way, or just even if it's just an overall strategic point of view from looking at, is my portfolio working correctly? Is it efficient? Are there any tweaks? So, things like that, and also on the insurance side. But I look at it more from a strategic, point of view, as just kind of like we're getting our financial house in order. I think it's definitely something that we should be looking at a minimum a yearly basis, but probably a little bit more frequent.
Yeah, that makes sense. Chris?
Well, that's a really good segue, Carlos. It brings me to the next thing I wanted to talk with you about. I think just about everybody is starting to pay attention to the stock market lately. As we've had the worst January in history, and things have kind of started shaking people up again. There's a lot of there's people who are day traders, long-term investors. And you can drive yourself crazy looking at it on a daily basis. And certainly one thing I always tell people is, find out what your strategy is and what, type of investor you are. Because, if you're a longer term deal, the day to day you don't need to get all wrapped up in that. You do need to monitor things. But, and if you're a trader, you better stay on top of it. So what I know, dealing with professional athletes and business people who are really busy, and one of the things that you hear a lot is, well, I just don't have time to stay on top of this, or to trade in and out quickly, or even on a monthly basis. So what should I do? What advice would you have for somebody that's kind of, in that situation? Like, take a pro athlete. It's going to be really hard for them to do any kind of investing or do a whole lot of anything during the season. And usually, they can't really do much until the off season. What would you say as far as planning for them on their investments, and also preparing for situations like what's going on right now, and then kind of what to do in these areas?
Yeah, great question. So really the first part is you need to know the person that you're working with. So whether it's through some kind of risk profile questionnaire, or just knowing the person that you're working with a little bit better, you need to know where they stand as far as for risk, how much they're willing to take in risk, if any, and their time horizon. If they are a short time horizon and they're just more of a conservative investor, then there's probably no need to be in the market, because it's not going to fit that profile. That profile really is for a long-term investor. There's obviously the general notion has been out there for many years that markets will go up and markets will go down, but overall in the long haul, markets will go up. And from the 70s all the way until the tech bubble burst, that's been very accurate. And in the last 15 years, and now we're coming up obviously on the next 16, it's changed. We've had two large market drops. You have a lot more people panicking, and essentially our society went from the type of society that when we were in a panic, 70s and the 80s and even the 90s, we would pick up our phone and call our broker, and might be able to kind of get they might be able to talk you down a little bit and just be able to cool you off. So there's a little bit of a cool off period. But today with technology, we get on our smartphones, my smartphone, my laptop, all this technology, and we can just put in an order to sell and just be done with it. So,
well, half the time it's machines trading now too. That they just got some program running that where the flash crashes have come from and stuff. It's all that high frequency stuff that people aren't even pressing buttons.
Right, it's all auto-programmed.
Yeah, there's a few of them. At least I'm familiar with one of them that's out there. But for the type of person, you really need to know the type of person you're working with, and if they are more of a conservative, then you need to look at things such as in the banking field. I've had clients that I've worked with throughout the years that have never been invested one day in the market, and they've accumulated over $3 to $5 million. It's just the type of person that you are. If you're a religious saver, or if you're not a saver, that's the problem. That's where a lot of people get in that trap where they feel that they need to be in a lot of high-risk investment vehicles in order to make up for the savings, and then they end up burning out at some point or another.
Yeah, I always tell people they should have a plan for, saving money on a regular basis to put into investments. The regular saving plan for just savings and emergency stuff, but then also their investment savings so that they can feed their investment portfolio and keep it growing rather than just, all right, well, I put this much in and then we'll just play, with this the entire time. It's a whole lot easier if you're continuing to put money in on a regular basis, and then certainly in times like this, everybody gets scared often. But usually the best time to buy is when things are crazy. Like Warren Buffett says, buy fear and panic, and then sell when people are getting greedy and just really crazy with valuations and stuff.
Correct. I think Warren Buffett also said that the majority of people, they end up buying high and selling low, so they don't tend to stick with that notion.
Yeah, that doesn't work quite as well, does it?
No, I don't think so. No.
Well, that's another thing with that philosophy. You get so many people who get kind of drawn into the market because look at the Powerball situation. Okay, well, it got up to $1.5 billion, and you almost had to buy a ticket. So even though you're throwing your money away, but when the market just really starts going crazy and really irrational at times, that's when everybody's trying to get in because that's when they think the money's being made. And I learned a long time ago, one of the lessons I learned was you don't make your money when you sell, you make your money when you buy. Right. Or that's where your profit comes from. You make your profit when you buy. You just don't lock it in until you sell it. But it's if you buy it at a cheap enough price. I've got a friend of mine who's a big real estate guy and developer, and he's never lost money in 20-something, almost 30 years of real estate investing. He's never lost money on a deal. He's broke even a couple times, but he's never lost money, and it's because of the way that he buys it. He buys it right. Talk a little bit about buying stuff at the right times, and also what to do in situations like this. Real quick, we got about 30 seconds or so. Sure.
Well, I mean, buying at the right time. I mean, obviously, you need to, not get into the whole panic, but as far as for everything that's out there, we need to realize that if you're a long-term investor, that we're going to have these periods that we're going to have some losses, and we just need to be on it for the long ride. If you're just a total person that wants to get out of that, then you need to look outside of it. You need to look at some alternative investments or something else, just like your friend that's in real estate.
Hey, if we could we get each of you guys to give people a way to contact you in case they want to learn more about what we've talked about?
Certainly.
Absolutely.
Go ahead, Carlos.
Absolutely. The easiest way is my number is 407-219-9017, and if it's toll free, it's 877-990-3427.
Great. Chris, how about you?
Well, the easiest way to find me, just go to chriskidd.com. That's CHRISKIDD.com, and you can find out a little bit more about me, what I do, and my story, which is kind of interesting to a lot of people.
Well, great. Yeah, it's a very interesting story. Well, thank you guys for being on the show, and I want to remind you that you are listening to The Price of Business.